So the past few months, from around December until now, has probably been the most frustrating period of trading for me personally. Since the beginning of this year, I've been in a drawdown. My account's down around 8%, which is fine. Drawdowns are completely normal, especially for swing traders like myself. But what's been particularly frustrating for me are several things really. The first being is that last year was pretty easy. I had so many good trades and a few 10R trades. The first quarter was good, so that's always a good thing when you're off to a good start to the year. And the third and fourth quarter were good too. Aside from the market correction in July, August, the market was in an uptrend for the most part, which helped to drive up prices for many stocks. The second thing is that due to the success I had last year, I sized up my risk, so now I'm risking 3 times of what I was risking last year. And I know this is probably the worst time to size up. It's given these crappy market conditions, but you don't really know the market is going to be choppy until it actually chops around for a few weeks. And the third thing is the length of the drawdown period. Now, since becoming profitable, this is my second longest drawdown period. And I'd say I'm quite patient, so I could ride it out, but I've had so many losses. But fortunately, nothing I can't bounce back from. The losses I've had have been contained. But the thing that's caught me off guard is the amount of break-even trades I've had. Now, these trades would run up to around 1 to 2 Rs, and I'll move my stop loss to break even, and then they'd reverse and stop me out. There's just no follow through on anything at the moment. Well, not that I've been in anyway. And I think the most frustrating part is this, because you get your hopes up and then the market takes it away. Anyway, now's not the time to feel sorry for myself, and I'm definitely not looking for any sympathy. The purpose of this video is really to tell you how I'm going to navigate this situation, as I'm sure many of you are in the same boat as me. And if you're not, and you're smashing it, then keep doing what you're doing, of course. But for long-based swing traders like myself, these market conditions the past few months have made trading incredibly tough. I'm sure you're all aware of the tariff wars and recession fears and whatnot, which seems to be the catalyst for this weak market. But setting aside the macroeconomics, which is it's not really my focal point, I want to talk a bit about the technicals. So the overall market, and I'm using QQQ as an indicator of market sentiment, it was chopping around for a few months with really no sense of direction. Now, in my opinion, this is the hardest period of trading because both long and short trades have little to no follow through. Now, this choppy period is much more suited for day traders because there's a lot more volatility and you can capture the big intraday moves. Then just a few weeks ago, we finally got a proper direction, and that direction has been down. There's been some big drops with some very short-lived bounces, which admittedly I've tried to catch, but I won't be doing that again. And even though I only trade to the long side, this drop is excellent because it's going to provide more opportunities when the market does eventually recover. The faster and steeper the drop is, the better. So for anyone who was trading during the COVID crash, you'll remember how drastic the drop was. I think it dropped like 30% in a matter of weeks, and then it made a sharp V-shaped recovery, which we rarely ever see. Then we had one of the biggest bull runs ever after that. Now, I'm not suggesting that we get that kind of price action here. The reasons behind this current market drop are much more different. But I really do hope that we get into some really oversold territory. Right now, the Qs are down only around 13 to 14% from its all-time highs. So nothing too drastic yet. But what I really don't want is a slow and prolonged market recovery. where when there's a few steep drops followed by some dead cat bounces that last a few weeks. This would mark the behavior of the dreaded bear market. We had one of these back in 2022 that lasted for the entire year. Even though I was trading during this time, I was still very much learning on the job and I wasn't yet profitable. So I really don't know how successful my strategy will be during a prolonged bear market. All I know is that I need to keep my losses contained and remain in cash for most of the time. But hopefully this is just a temporary market correction, similar to the one we had during the middle of last year, or at worst, the 3-month-long correction we had back in 2023. But I'm praying for the market bottom by next month. So we'll see what happens. Ideally, what I'd like to see is a climatic move to the downside, followed by signs of support, and then a turning of the tide. So the 10, 20, 50, and 200 moving averages should all be above one another, with all of them sloping upwards. Anyway, no one really knows what's going to happen. These elements are completely out of our control. However, there are certain things that we can control in order to survive this market and prepare for its inevitable recovery. So I just want to talk about what I'm going to do through this difficult period. And this is something that you might want to be looking at also. So the first thing I'm going to do is take a more defensive approach. So that means moving to break even a bit sooner. So if the stock runs up to say 0.7R, I'd move it to break even. I'm going to take a bigger chunk of profit sooner. Usually I'd sell 35% at 2R, but due to the many break-even trades I've recently had, I'll probably sell 70% at around 1.7R instead. I'm going to be a lot more selective with my trades, whereas during good periods where I've had a few good wins, I would take more chances, but now is not the time for that. I'm probably still going to trade the same size and setup simply because I know that my setup, episodic pivots, it can still work during downtrending markets. There is just fewer of them around. But if you're trading breakouts, then you might want to remain in cash or size down because breakout plays are notoriously difficult in this environment. There's just too many false breakouts. I'm still going to keep reviewing all of my trades I've taken and all of the trades I've missed for whatever reason. All of this gets saved into TraderSync and OneNote so that I can always refer back to it. I'm going to still monitor and update my charts every single day, even when there aren't any opportunities. This keeps my senses sharp and ensures that I'm always prepared for whatever happens. Now, I know some traders, they can go away for a few weeks at a time and not look at their charts. But when I've done that in the past, I've always come back to the charts feeling a bit lost and a bit unprepared. I'm also going to keep an eye on stocks that are showing relative strength to the market, the ones that are holding the best through this market drop. Now, these are the ones that will likely make the biggest moves when the market finally does recover. Anyway, I think that's about it really. And some of you might be thinking, why don't you just change your strategy? Why don't you play shorts instead? Or why don't you just day trade? That's a good point, but I personally find it hard to switch back and forth between different setups. It's just too confusing for me and I prefer to keep my trading as simple as possible. But it's not just that. I got into trading to be not only financially free, but time independent too. And I don't really want to sit in front of the screen all day, every day, stressing over various trades. It doesn't bode well for my sanity, which obviously has a knock-on effect on those around you. And I think there are very few traders who can be like chameleons, switching up trading strategies at any given notice. And if you're one of them, then salute to you. But if you're not, then your best bet to ride out this market as smoothly as possible is to focus on playing defense. Anyway, I think this video has gone on far much longer than I intended. So I'm just going to end it here. So all the best to your trading, and I shall see you in the next video.